I think that we're sitting at, the echo peak, if you will, of the greatest financial bubble in the history of mankind. The only times you ever seen the equity market be this overvalued was in 1844 during the railroad boom, in 1929 during the auto boom, and then, of course, during the internet boom. And this AI is kind of like, if you will, an echo of the internet boom. It's the same technology, really. It's just more and more empowered because of Moore's law, because of growth and memory, all the things that you guys understand about the way tech continues to grow more efficient. So this is just the internet bubble part 2. And of course, it's going to end the same way. Most people really don't understand the accounting of why the internet bubble burst. The real reason why the internet bubble burst was because all of the electromechanical switching devices that Lucent had sold in the 5 years that led up to 2000, all of those were supposed to be depreciated over 15 to 20 years. And within about 12 months, they were worthless because optical switching came in.
This will be a fun conversation. We were just joking about all kinds of things, not sharing tech, not sharing significant others. I think is part of that also. We have Mr. Porter Stansberry as our guest today for the High Conviction Podcast. This podcast, High Conviction Podcast, is hosted by Granite Shares. Will Ryan, my friend and founder of that firm, who's kind of been on fire as of late. If you're not familiar with Granite Shares' products, you unequivocally should be. Now, I want Will to introduce himself, and then we'll get right into Porter Stansberry's background and all the big things we're going to be talking about today.
Yes, sir. Well, thank you. Will Rind, founder and CEO of Granite Shares. We're an ETF issuer, so exchange-traded fund issuer based here in New York City. Manage a platform of ETFs ranging from everything from gold to leveraged ETFs on single companies. We're active in the US market, and European markets, and Asia as well.
And of course, the man himself, Mr. Porter Stansberry, who's been around for a minute when it comes to the content game on the investing side, and it's kind of a good investor himself. But Porter, for those who are not familiar with you, kind of a quick CV would be nice.
Sure. I started writing investment newsletters out of college in 1996. I've worked with some of the most famous guys in the history of the newsletter business. Most notably, Bill Bonner, the founder of Agora. I started a business with a borrowed laptop computer and $36,000 in 1999 called Stansberry Research. That ended up becoming the largest investment newsletter business in the world. About 16 million subscribers. Went public in a reverse merger and $3 billion deal in 21. I retired. Lots of other strange things happened. And I decided to come back and start a boutique firm at my farm in Maryland, where I literally work in a tractor barn with half a dozen of the top analysts in the world. People like Erez Kalir, a Rhodes Scholar, biotech investor, Marty Fridson, the most famous analyst in the history of corporate high yield, folks like that. And we have, expensive newsletters for experienced professional investors and high net worth people.
Is it fair to say that newsletter growth is correlated to volatility in equities?
That's a great question. And, I would tell you that newsletter growth is simply correlated to great storytellers. You show me a great writer, and I can show you a guy who can build a newsletter file. And when you tell a great story, you can build a big business. The story that I told that really built Stansberry Research was called The End of America. And it was my thesis that the big bank bailouts during the global financial crisis were going to put America on the path to a hyperinflation. And most importantly, the problems of inflation that are social. So it's inflation that leads to the desperate situation of the middle class. It's inflation that actually leads to the polarization of the political system. It leads to populism. It leads to candidates like Trump and like Obama that promise great change through government. It also, unfortunately, leads to gambling and prostitution. And that occurs in every society where you have hyperinflation, all the way back to Weimar Germany and before that to the Roman Empire. So I just predicted that a lot of these, and a lot of the social enemy, as the sociologists call it, was going to emerge. And then America was going to be a very different place over the next decades because of the government's decision to finance its operations with the printing press. And of course, when I wrote that in 2010, I got laughed out of the building. I also got laughed out of the building when I wrote that Obama would have a third term as president. And, people thought that meant I didn't understand the Constitution. And what I thought it meant was they had never seen a sociopath before in the presidency. I mean, it was very clear he wasn't going away. He's the only ex-president who continued to live in Washington, D.C. after his term in office. And if you don't think he was the president in the last 4 years, then you weren't paying attention.
I want to ask you something, actually, just and we've never met up until this moment, but I've been using a quote that is supposedly from you for as long as I can remember. And I just want to ask you if it's actually one of your quotes. But somebody once told me that a quote that you had was that the American public, can forgive you or will forgive you for being wrong, meaning about stock analysis or tips, whatever, but will not forgive you for being boring. Is that true?
That's very close. The famous newsletter dictum is sometimes wrong, but never in doubt.
Right.
Yeah. People really want to know where you stand. And most of the mainstream media is the two-handed economist, or on the one hand and then on the other. And that doesn't really work for our audience. Our audience is, for the most part, pretty skeptical, pretty savvy investors, professional and high net worth retail. And they really want to know what you mean. They don't want double talk, because that's what they get all day long from the banks and from the media. So, yeah, I've certainly been wrong in my career. It's going to happen again, too. But I've been right about a lot of really big ideas. I was writing about the problems in General Electric's accounting and balance sheet all the way back in 2002. And I wrote for more than a decade that the company would collapse in an accounting scandal. I knew something about it because I knew some very senior employees in the power side of their business, and they were explaining to me the way they were doing the mark-to-market accounting with all the power contracts. And it was insanity. And so when they bought that giant French company, which was a dog, the reason why they bought it was because it had a huge number of these power contracts that they could manipulate to create earnings. And I also knew some people in the insurance side that was explaining to me the problems of the long-term care policies. So I was just, and also, by the way, at one point in the mid-2000s, General Electric was the world's 10th largest borrower. That includes sovereign borrowers. Like, what? I thought you guys, made light bulbs and dishwashers. What is going on? So, that's an example. I had a really nice, pretty famous string of parodies where every quarter I wrote the letters from the chairman of General Motors explaining exactly how they couldn't make money in cars anymore. So they'd gotten into subprime mortgages to try to make some coin, and how they were definitely going to go bankrupt. And I was writing as though I was the chairman, saying what he should have been telling the shareholders. I covered the fraudulent bankruptcy. Here's a good point about that. Do you guys know the Obama administration spent $50 billion on the so-called bankruptcy of General Motors, which was just a bailout of the unions? Even today, General Motors is not worth $50 billion. I mean, that company cried out for liquidation. And what we've got is just another crappy zombie car company. Have you seen the latest? They've made 1 million engines that don't work. There's going to have to be a recall on 1 million engines. And I mean, shouldn't it be obvious to everybody that you don't want the government building cars? How about the idea that the government's going to have a sovereign wealth fund? Have you seen a worse idea since Fannie and Freddie, when we're going to let the government run the mortgage market? What happens next, guys?
I think that's a play to get TikTok. Right, that seems to be what the sovereign wealth fund side of it is. And Trump's not a dummy. Yeah, I think that seems to be what the speculation is. It's a way to get TikTok out of China.
What happens with all these things? Fannie and Freddie ended up being an arm of the Democratic Party. They actually had offices in 23 different Democratic districts where they would spend company money to support the congressional candidate of the district. I mean, that's just complete fraud. It's just a scam. And, all the press about USAID, the same things, of course, in that organization. I just don't want to see the Republicans set up their own version of these things. I just want the government. I want the government to, take care of the borders, make sure that we have a military and get out of our lives. And I think that's what the people elected him for. So I hate to see them start doing the same things that got the other party in so much trouble.
Yeah, I was going to say, just to riff off of that for a second. So I know this is obviously always a big question, but kind of what do you think things are at the moment, sort of big picture wise, macro?
I think that we're sitting at, the echo peak, if you will, of the greatest financial bubble in the history of mankind. The only times you ever seen the equity market be this overvalued was in 1844 during the railroad boom, in 1929 during the auto boom, and then, of course, during the internet boom. And this AI is kind of like, if you will, an echo of the internet boom. It's the same technology, really. It's just more and more empowered because of Moore's law, because of growth and memory, all the things that you guys understand about the way tech continues to grow more efficient. So this is just the internet bubble part 2. And of course, it's going to end the same way. Most people really don't understand the accounting of why the internet bubble burst. The real reason why the internet bubble burst was because all of the electromechanical switching devices that Lucent had sold in the 5 years that led up to 2000, all of those were supposed to be depreciated over 15 to 20 years. And within about 12 months, they were worthless because optical switching came in. And the cost of bandwidth absolutely plummeted. The entire business model, long distance, by the minute disappeared. My kids don't even know what long distance is. They they don't understand what that means. And so you'll see the same thing happen in AI. These massive capital investments that are being made by all the big tech companies, they're going to assume that they have a useful life of 10 to 15 years. And something will happen, whether it's DeepSeek in China or something else will happen. And all these investments will be worthless overnight because there'll be some kind of an end run or a software patch or something will be innovated to make it all work better, faster, and cheaper. I think if you look carefully, the one thing that was sound during the internet boom, part 1, was good investments in reliable baseload power. If you look at, I'm trying to remember the deal. Obviously, it wasn't Enron, but if you look at the folks who were involved in getting natural gas into the electrical generation fields back then, so I'm talking about the Calpine and those kinds of businesses, they did very well in the following several years. I remember there was actually a race to buy up all of General Electric's gas turbine manufacturing output. Like they had sold all out for like the next 6 or 7 years because there was such a growth in power demand. And I think you're going to see that again this time, but even larger. By the way, my expectation here is probably going to be, once again, I'll be laughed out of the building like I was about the end of America, like I was about Obama's third term. And then funny how these things just happen anyways. So I think you're going to see base load power grow in the United States by a factor of 10 in the next 10 years. I don't think anybody really yet understands how much robotics is going to change our economy and our way of life. And all of that has to be driven by really cheap electricity. And the only way to make really cheap electricity at scale is either coal, natural gas, or nuclear. And sure, I know that nuclear is the ultimate answer. There's no question about that, right? What is it? A pound of uranium houses as much energy as 1,000 pounds of coal. So, eventually that's what we're going to end up with. But there's going to be a lot of regulatory scrutiny. There's going to be a lot of testing that has to be done before that can become commercially safe, distributed, and at scale. And in the meantime, we're going to need a whole lot of electricity. I got just a couple of numbers to put this into context for you. Anybody know how many truck drivers operate a semi truck every single day in the United States?
You got me on that one.
3.3 million. You got any idea how much energy that takes in terms of diesel? Now, if you put all of that into a robotic truck that's powered with electricity, what's that mean? Then the other thing you start thinking about is how many Blackwell chips can NVIDIA make? A ton. How much energy is it going to require to power all of them at the same time? Start doing that math.
Does the Chinese DeepSeek change any of that? Because obviously, things are moving quite quickly, but a lot of the power stocks got hit last week with this idea that we can do more for less, and that we won't need the amount of power that was perhaps talked about before.
Yeah, I love all those kind of arguments because it really shows a fundamental weakness in people's understanding of economics. You can never have too much intelligence. You can never have too much energy. The demand for those goods in an economy are insatiable, and they're completely related to price. So if DeepSeek is able to do a lot more with a lot less, that will actually increase the power demands because there will be much more demand for those kinds of services.
It's like the NVIDIA sort of bull case, on top of that, which NVIDIA got hit and was probably the biggest, poster child for what went wrong last week. But actually, the bull case for NVIDIA is basically what you just said, which is, well, okay, if you can do more with less, then does that not mean that the barrier to entry for AI comes down? And therefore, it's not just the largest hyperscalers that do AI. It's
everybody.
Maybe not mom and pop level, but it's small and medium-sized enterprises that can now afford to get into the game. And therefore, the demand increases across the board for
it increases exponentially, and so does the rate of innovation. The more people that are monkeying around with these things, the better the technology will be. And somebody is going to create some kind of a magic widget bridge that links all of the available compute power seamlessly in real time. Like the whole infrastructure will get vastly more efficient over time. And I just can't wait to see what the innovation, how fast the innovation begins to increase, because AI will allow us to build things in software that we were unable to conceive of before, which is really like the sort of crazy, like the force is with us moment when the computers start delivering goods for us that we couldn't imagine. And I know that sounds very pie in the sky, but I think that it's inevitable.
Yeah. Well, I think for me personally, just when I get in a car for the first time that's not driven by anybody, that's a it's a massive moment.
How about when you get in the car and the car has already hacked into your American Express account? It knows your entire internet viewing history. It's read every text message to every woman you ever wrote in your entire life, and it just starts talking shit to you about what a dog you are.
That'll be truly scary.
And you're like, shh, my kids are in the car. Shh.
The future we can all hope for. No, hold on. So everything I'm hearing you say, it sounds a little bit like the argument of the exponential age that Grove, Paul, and others have argued. How do you put a valuation on that? I mean, on the one hand, there's the argument that U.S. equities are very expensive. On the other hand, if they're expensive for a reason and all these AI things come to fruition, maybe the market's cheap then, isn't it?
No, absolutely not.
Any square
again, I think the two are just completely apples and oranges. Is everything that we can imagine going to change about technology in the next 10 years? Yep. And has that been the case for our entire lifetimes? Absolutely. Yeah, that's always been the case. But that does not change sort of the immutable laws of supply and demand. And so these companies are only going to make a return on these big investments if they have some kind of a moat and can maintain margin. And what's going to happen, of course, is that the more the innovation, the faster the rate of innovation, the faster the faster the decline in the value of the assets. My brain's not working this morning. The amortization. So if you're building a $60 billion data center and you expect it to last for 15 years, it turns out because of the change in technology, you have to rebuild the thing every 5 years. That's a whole different kind of cost that you're not modeling for, and it could wreck your margins. The other thing that'll be really interesting is, if in 5 or 7 years I can do everything they're doing in a data center on my phone, then why do I need a cloud anymore?
Yeah, which is the argument for Apple, I think. I think in general. Speaking about AI, are we ever going to see artificial intelligence beyond our politicians in office having artificial intelligence? Meaning, are we going to see AI permeate on the government side and create efficiencies that suddenly means maybe the debt side is not going to be as serious?
I hope so. One of my hobby horses has been that, democracy doesn't work at all if you have uneducated people voting. And there's lots of...
You're saying it's not working right now. Is that what you're saying?
No, I think that America is a very largely educated population. But you have a city like Baltimore, for example, where none of the 8th grade students are reading at grade level, and they haven't for 3 or 4 decades. And there's a reason why we can't elect a mayor who doesn't later get arrested. We haven't had a mayor in Baltimore in 20 years who wasn't an active criminal. Why do we keep electing active criminals? Because we have an entire population in the city of Baltimore that is functionally illiterate. So what did you expect? So my hope, and I think it's kind of a pie in the sky hope, but my hope is that AI allows people to do a better job of checking up to make sure that the government is doing its job, is following the rules, and is not, isn't crooked. But that presupposes that anything's going to change about the electorate. And you know what Barnum said about the American people. You'll never go broke underestimating the stupidity of the American people. So I don't know. I don't know that AI is going to really change in a fundamental way the way that we're governed. I think it will certainly make the people who are critics of the government very empowered, as it will with any institution. It's a whole lot easier to check on people doing what they're supposed to do when you have the kind of surveillance that is possible through AI. And I can't wait to see, in our field, in the newsletter space and investment research, I'm really eager to see who builds the first really good AI platform where I can just type in the name of a stock and I can say, give me a really detailed bull case, give me a really detailed bear case, show me what the growth in dividends is likely to be here for the next decade and tell me why. That, right now I have to pay a whole lot of smart people a whole lot of money. And it takes a whole lot of time to do that. And I think AI will probably be able to do that in seconds pretty shortly here, which could really increase my company's gross margins.
I want to show a comment real quick from YouTube because I think this is interesting. If workers get replaced by AI, who will buy products and who will pay taxes? Because it's an interesting concept. It's like, I've heard arguments that the inevitable outcome of AI is UBI, universal basic income.
Yeah, I hope that's not the case, or we're going to have a whole lot of people addicted to drugs and hopeless. I don't think that UBI is good for human beings at all. And listen, guys, this is not the first time in human history you've had massive increases of productivity, right? Yeah. We did when the gin mill came along. Was that the end of farming? No, it made cotton vastly cheaper. It was really responsible for the end of slavery. And all those people and all those resources went on to be employed in other new productive ways. So great. We don't have to think about it this way. This is maybe a better example. Do you have any idea how many more accountants we had before the advent of spreadsheets? Yeah, millions more accountants. Well, now you don't need as many accountants, but you still need accounting. And so those people are freed up to do something that's a lot more creative, a lot more useful. I think if you look at AI as a barbell, this might be a tired metaphor, but on the low end, you've got people like truck drivers, forklift operators, Uber drivers, personal shoppers, yardmen. You've got people with no intelligence, and I'm not trying to be mean. I'm just saying that they don't use their minds in their work. Those people are going to be completely replaced over the next decade with robotics and with AI. And at the very high end, the people who charge a fortune for the use of their exquisite brains, talking about research scientists, talking about the guys who do the most incredible coding in the world, the most advanced mathematics, the engineers who design the chips, all these people are also going to be replaced. That's going to leave a whole lot of people in the middle that are going to have much more demand for their services. People like plumbers, people like carpenters, people like designers, people like storytellers. It'll be really hard, I think, for AI to replace those people. And so those fields will grow and employ more people. And the overall wealth of the economy will continue to increase because we'll get vastly more efficient.
There was actually an interesting point within that question, which has been talked about a lot, since Trump came in. And that's this idea that on the taxes front, that we won't be paying any income taxes anymore, because the whole point in tariffs, or at least the origination of tariffs in America, was so that other countries would pay, and therefore there was no income tax. So before income tax was brought in. Now, I don't know how serious they are about, any kind of inclination that, income taxes are going to go away. But there is an argument to say that income taxes could be reduced if, income from tariffs gets increased, which is kind of an interesting concept. So the product side of it, of course, people are still going to need things, they're going to buy things. That's not going to change. But who pays the taxes is an interesting one, particularly in today's climate on tariffs.
I have two responses to all that. The first thing is the most unequitable and harmful part of the American economy is the tax code. It's ridiculous that a middle-class family with a combined income of $300,000 has a marginal tax rate of approaching 50% in most blue states. That's just a crime. Likewise, it's a crime to pay taxes your entire life to be a productive member of society and to end up with, because you saved and invested wisely, end up with $40 or $50 million and then have to give half of it to the state again when you die. I mean, this is just gangster shit. Likewise, America has an exit tax that's designed by the law the Russians used to trap their Jewish community. This is insane. Likewise, global taxation. America, the land of the free, is the only member of the G20 that has global taxation. So there's no question that we need deep reform of our tax code. It's horrendous. It's absolutely horrendous. And so I would be in favor of almost anything that replaces it, especially if we could get back to the meaning of our Constitution, which is that everyone should be treated equally under the law. Every single person. So if I make $1, it shouldn't be taxed any differently than if you make $1. And I think the easiest and simplest way to do that is a tax on consumption. We already know how to do this. It's very simple. It's a point of sale tax. Everybody pays the same rate. And what I would beg is that we set that at some nominal level. God told us that we should tithe 10%. Surely if God can live on 10%, our own fucking government can live on, say, 15%. If the tax was that low, nobody would care. The government budgets would be small. We wouldn't have to fight about who the president is because it wouldn't matter. And we wouldn't have the budgets to start wars all over the place. And by the way, we have two moats, the Pacific Ocean and the Atlantic Ocean. We really don't need to spend $1 trillion a year on our military. It's complete insanity. So let me say first that I'm in favor of deep reform in regards to taxes. But tariffs are the worst idea in the world, because they eliminate the ability of global specialization of labor and trade. And that is where most of the wealth in the world originates from. There's a reason why they don't grow bananas in Iceland. And it isn't because people in Iceland don't like bananas. It's because they have no comparative advantage in the banana trade compared to Costa Rica. And likewise, there's a reason why, this is, of course, kind of a joke, but there's a reason why they don't farm cod in Costa Rica. It's because you get cod from Iceland. And that makes the whole world wealthier. And when you interrupt that by allowing foreigners to put tax rates on your country's exports, you're just setting up for a world where there is no representation in that tax rate, where everybody's going to be retaliating, everybody's going to use beggar their neighbor policies, and the world is going to devolve into a really bad place. And most people think that the Smoot-Hawley tariff is what caused all this. It wasn't. All right. The first punitive tariff was passed in 1922 in the United States, and it was passed in response to a very, very small recession that occurred after World War I. The farmers saw a 50% reduction in their income in 1921 because the World War ended, because the European farms restarted. There was more competition. There was more supply. Prices fell. In response to that, the farmers lobbied the government for aggressive 50% tariffs on farming goods. What happened next? What happened next was the worst decade for farmers in U.S. history. Even though everybody else boomed in the 1920s, farmers, they all went broke. Because what did the foreigners do? They passed retaliatory taxes on all of the farming products. Meanwhile, of course, everything because of inflation, because the inflation that the tariffs caused, everything the farmers had to buy doubled in price in 2 or 3 years. So, and then, of course, also America was booming because we had the world's largest automobile manufacturing base. We should have been exporting cars to the world, but we couldn't sell our cars to Germany because the farmers wouldn't let the Germans sell their wheat to Americans. So these are all kinds of things that happened. Finally, what happened with Smoot-Hawley was in 1930, everybody else in the country saw how the farmers were being protected, and they said, we want some of that too. So those tariffs that were originally passed in 1922 got applied across the entire economy. But it wasn't Smoot-Hawley that did it. It was the older tariffs that set that precedent. And so if we start today saying, oh, we're going to have tariffs of 25% on Canada and Mexico, it will not be long before people are in every industry are lobbying the government for their form of protection. And that is a cycle that will lead us to poverty. And every economist in the world knows this. This is not in doubt.
Speaking of leading us to poverty, how's that for transition? We talk about the Treasury funding needs. It seems like the U.S. government's on its way to poverty as well. There's some big liquidity.
Isn't it? It's linked to the tariff argument, the budget and the fiscal. Yeah.
Yeah. Let's talk about it because I put out it was a chart actually from James Lavish that I put out on my own account, showing when the rollover of Treasury bills, and maturities are expected. And there's a lot coming in the next year, 2 years. And I keep making this argument myself that they'll crash stocks to save bonds, which is basically a flight to safety to cause yields to break, deflationary scare, so the U.S. government can roll over all that debt into much cheaper financing. Let's talk about the funding needs of the government for a bit here.
All right. Well, the U.S. economy is roughly $30 trillion. And we have roughly, a 2.5% savings rate, something like that. It's not very good. I can't do that math in my head, but I think that's maybe about $1.5 trillion in savings. And we've got to come up with a $10 trillion Treasury roll in the next, 18 months, something like that, 12 months. Mm-hmm. So you guys do that math. How does that work? And you think foreigners are going to buy our bonds after we confiscated the Russian assets, after we threatened tariffs on our closest trading partners? After we're demanding the return of the Panama Canal, the American Canal. Yeah, if you were an investment bank, is this the way you'd sell those bonds?
Yeah, I think the interest last year was over $1 trillion, just interest payments alone.
Yeah,
cost $1 trillion for the first time.
Yeah, and Michael, you would know this better than me, I think. But has there ever been a larger short position in U.S. Treasuries ever in the history of the market?
No, and I'll tell you something because I think it's it's relevant certainly to my world, but the bearishness on treasuries is misguided only because I don't think people understand that if the U.S. is broke, then corporate credit must break.
Yeah, you got that right.
Right. And so it's because the U.S. government owns us through taxation and they have a military. So if it's going to be the U.S. government or corporations, the U.S. government's going to choose itself.
Well, here's what I think about that. I'm very well aware, like you are, that the dynamics in the bond market are sort of unprecedented. We've never seen, look, the same thing in the stock market, right? When's the last time there was no equity risk premium? When's the last time there was zero spread between corporates and treasuries? So what I see is happening is that we've moved into an entirely new type of monetary system where there will be no default because the answer is always the printing press. So if there is no corporate default, then there is no difference between the bonds because everything is underwritten by the Treasury at that point, stocks and bonds and the economy. So what I think you're seeing in gold, and I think what you're seeing in Bitcoin, and I think what you're seeing in the valuation in the stock market, and I think what you're seeing in the lack of any risk premium in the corporate bond market is that everybody knows the answer is they're going to print. So it's, I think that people think it's a one-way bet in gold prices. And if you look around the world, the other central banks sure seem to think so too. In my lifetime, we've never seen central banks buy so much gold in a 3-year period.
Does anything change that? Because I'm inclined to agree with you 100%. And that is, certainly the way that things have gone, for at least since the financial crisis. But is there anything that could change that you see?
Yeah, absolutely. What would change that immediately is if any of the major Western countries began to run consistent surpluses and had a hard currency. You know,
you're saying nothing will change that, is it?
I'm not talking about Argentina. I mean, Argentina is, you know, it has an economy about the size of Orange counties. It's not going to affect the global currency flows. But if you had a situation where the United States, like it did in the 1990s, on the back of a technology boom, used the innovation in its economy and the growth in its productivity to close the gap on its fiscal and revenue side, I mean, then the strength of the dollar will continue, and the people who are buying gold and Bitcoin are going to be wrong. And I don't think that's impossible. I don't think it's impossible for there to be sensible entitlement reform. I don't see any reason why you can't raise the age of Social Security retirement to 78. Because if you look at when it was established, you know, only X% of the people lived to 65. The Social Security was never meant to be a way of you living on the dole for 25 years. It was meant to support you at the very end of your life when you couldn't work. That has to be what we go back to. Likewise, I don't think many rational Americans would disagree with the idea that there can be a limit to your health benefits. Every American deserves a modicum of support when it comes to healthcare because we can afford to do so. What we can't afford to do is pay unlimited amounts of money to anyone's healthcare for any reason. Can't afford that. So look, you know,
as the British know all too well.
Right. But I mean, these are very sensible reforms that may not be popular in the media, but I think most Americans sort of deep in their heart know, yeah, we probably have to do that because otherwise we're all going to go fucking broke. And I'd rather have a functional financial market and a functional currency than have the lie that we can all live at the expense of our neighbor. So I don't think those things are one of two things is either going to happen. Either there will be a complete, absolute, total socialist reset where the Treasury defaults, where there's just absolute fucking chaos in the financial markets, or else we're going to make some really sensible, important reforms and have a balanced budget and begin to repay those debts. And those choices are going to have to be made during this presidency.
Yeah, and you could argue, if you want to take the optimistic view, that that's already happening. To what degree and to what result, clearly that's to be decided. But you know, the Doge project is for one thing, you know, on the budget side of things, trying to get some fiscal discipline to government spending, and then on the, you know, whether you like it or not, on the tariff side, you know, something to be done about the trade deficit.
Yeah, I think, like I said, I don't think these are impossible problems to solve.
Yeah.
I think there's been a total lack of political will to solve them for a long time, and that may be changing. I certainly think that Trump is the only president that has a chance to reform entitlements. He's a lame duck. He's not going to be running for re-election. And if history is any guide, you know, his party's going to get killed in the midterm elections anyways. That always is what happens. Yeah. So might as well go ahead and bite the bullet and force something through while you can.
Yeah, and I think there is some momentum at the moment, you know, with people being more open to the change or to changes that perhaps even just a year or so ago would have seemed impossible.
Yeah, of course. And you can do all this stuff very gradually. You know, you can tell everybody who's 50 years or older that nothing changes, you know, and then you just change it gradually over time and you manage the resulting political fallout. There's a political way to get it done, I'm sure.
Let's hope.
You maximize you maximize the costs and you minimize the benefits. Or sorry, inverse.
Speaking about Trump, is there anything in the first few weeks here that is different dramatically from his first term that you can see?
Oh, absolutely, right. He has surrounded himself with a bunch of pragmatists and a bunch of libertarians, and the uniparty people are nowhere to be found anymore, which I think is really exciting for those of us who have seen the government flounder. I mean, who would have thought? You guys, I'm not sure how old you are, but in the 1990s, Bill Clinton was so hated by conservatives. It was, you know, right. I mean, they had a special prosecutor to go after him for having an affair with an intern. Like, what? Meanwhile, we look back on Bill Foley now as probably the best president of my life. You know, him and Ronald Reagan. Like, it's just, it's the quality of the leadership we have had in Washington, D.C. for many years has just been abysmal on both sides of the aisle. And so, yeah, it's incredible to watch a guy like Elon Musk. It's incredible to see real pragmatic politicians like Marco Rubio. It's fun to have a plain-spoken, normal person like J.D. Vance. These are all changes that I think has most people in America optimistic and hopeful. And I hope they'll execute by cutting costs by $1 trillion or so. I hope they will be able to find a way to fund the Treasury without having to print any more dollars. And I hope that he'll be honest with the American people about what we have to do to afford the government.
And do you think that, going back to the tariff thing for a second, so clearly in the last 24 hours there was the tariffs were imposed on Mexico and Canada, and then now we're in a hiatus for a month. So do you think that we will get tariffs in some way, shape, or form as dictated, or do you think it was more of a negotiating tool for a better, longer-term deal?
I really don't know. I don't have any insight into that. But what I do know is that the American people should not be excited about taxes in any form.
Right.
What we need desperately is much lower taxes. On a combined basis, state, local, and federal, the government now makes up about 40% of GDP. The government doesn't produce anything. Yeah. We cannot afford 40% of our productivity, of our effort to be going into government. Prior to World War II, that number was more, the federal government was more like 4%. We need to get government in all forms down to around 10, 15% of the economy. And we know that if we do that, like Ireland did, like Singapore did, like New Zealand has done from time to time, like Argentina is doing now, you can have a booming economy. You can have low inflation and full employment, and you can have incredible per capita GDP growth. That is the way to wealth. It's not a mystery. It's just very hard to get people who are in control of so much power to give it up.
That's right. Yeah, the inertia that creates. Because I mean, you often think, right, that to be a politician nowadays, irrespective of what your view is, both sides of the aisle, but like the scrutiny, that you put yourself under, your family under, and then you have to ask yourself the basic question, which is, why would anybody do that? Like, what's the reward? And that's when you get to, well, maybe we do know. No, it's the money and the power that come with it.
Of course. And, there's legions of examples of all of that. Gottlieb ran the FDA, now is on the board of Pfizer. That's just one example, but there's many. Yeah, there has been a, I don't know if it's growing or new. I think it's always been that way. I think it will always be that way. Government is inherently corrupting. And that's why we really need to limit its power and scope.
So this is the High Conviction Podcast by Granite Shares. And we always like to ask a very specific question at the end of the podcast, which is, for Porter Stansberry, at this point, what is your highest conviction idea?
I'm glad you asked that. I actually have a product we call Conviction, which is where we take basically one idea per year and we say, we think this is the best idea in the market right now. And my best idea currently is Philip Morris. Philip Morris is a legendarily great business. It has produced more wealth than any other company in the history of capitalism by a huge margin. $1 invested in Philip Morris in the 1920s became $2.6 million by year 2000. So it is one of the greatest power law winners in the history. It is the greatest power law winner in the history of capitalism. And I think that humans have always enjoyed cigarettes and nicotine. I don't think that's going to change anytime soon. And they're the leading global brand of all of that stuff. Plus, they have innovated a new delivery system, which they bought from Swedish Match, the Zens. And I think they're off to the races with a highly addictive product and great margins and great marketing. And those are the kind of things that last through good times and bad. And, at 19 times earnings and crazy return on invested capital business, I'll take my chances.
Porter, for those who want to get access to your research, where would you point them to?
Yeah, you can check out my free daily e-letter. It's portersdailyjournal.com. portersdailyjournal.com. And you can also, if you want to subscribe to something, we'd love to have your business, of course. It's my research is available on our website, and that website is porterandcompanyresearch.com.
Thank you, boy.
Appreciate it. Great conversation. Thank you so much.